Before we get into the charts today, we need to talk about patience. Patience is probably the most underrated skill in trading, and it's also the hardest one to develop. Here's what I see happen all the time. Someone learns a concept, they get on the chart, and they immediately start looking for trades before they even understand what they're looking at. That impatience will cost you more money than a bad strategy ever will. Because here's the truth. The trade will come. The setup will appear. Your only job is to wait for it. Forcing a trade because you're bored, because you feel like you're missing out, because you want to see something happen, that is not trading. That is gambling. Today we're learning trends, and the most important thing about trends is how to find them. It's having the patience to wait for the right one before you do anything. So as we go through this lesson, I want you to practice patience just by watching, not by looking for trades, just watching what the price does. That's your assignment before we even get to your homework. Last Sunday, we talked about who I am, why we're here, and you got your first look at TradingView. Today, we go deeper into the first concept, trends. I told you last week that trends are the foundation of everything, and I mean that. You can't identify a supply and demand zone, an entry. You can't manage a trade without first knowing what direction the market is moving. So this is not a throwaway lesson. This is step one to the entire strategy. So by the end of today, you will know exactly how to identify an uptrend, a downtrend, and consolidation on any time frame. So the first thing that we want to get together is the red candles and the green candles. This is usually what my candles look like, but because that's just what I like to see visually, but regularly red and green candles is what we have. The red candle means the candle is going down lower than it was when it started at that time frame, and the green candle means that it's higher than it was when it started at that time frame. So these are all the time frames that they allow you, right? But we focus on are the daily time frame, 4 hour, 1 hour, 30 minutes, 5 minutes, and 5 minutes. The time frames are basically what happens from X time to Y time. So if you go on the daily chart and you see all these candles, matter of fact, let me go to gold because gold is just a little bit more clear. If you look at gold right now on the daily time frame, what can you make of just seeing this? No explanation, no big, deep explanation, but just from looking at this chart, what would you say about it? This chart has been constantly going up. So what does that mean? It's on an uptrend. Now, when you see uptrend, so this is our daily. So that means since September, we've been going up, 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 up. So that means we're on an uptrend. Now, the thing is, when you see trends, you're not going to just always see it going up like this. This is not how the market moves. The market doesn't move like that. The market moves up and down. I'm going to make this red and I want to make it thicker. Yes, we see that it's an uptrend, but in order for it to be a trend, it has to have movement. So we have up, down, up, down, up, down. And this is what we call an uptrend. How we see that? Swing highs and swing lows. So this is a swing, this is right here is a swing high. This is a high because it's higher than this last high. This is a swing high because it's higher than this last high. So high. So what we're seeing is we're seeing it get higher and higher and higher. But in the pullbacks, we see something else. We see our swing low. But guess what? Our next swing low is what? Higher than this last swing low. And then we see this, and then we see like a little pullback here. Because remember, it's not a straight line. When we're looking here, what we see here, swing high, swing low, swing high, swing low, swing high. So what we should be expecting soon is what? A swing low. But we're always expecting the next high or the next low to be higher than the previous one. So this is what we call an uptrend. Now, if we go to, I'm going to put a box. So we're on our daily time frame. So this is today. So at the bottom of your trading view, you see the dates, right? And if you look here, today's Thursday, January 2nd, 2026. This is the candle that we're currently at right now. We see that, this green one. So being that we see this, do you know what this candle tells us about the market currently? Right. And it's green. So
Yeah.
remember, up means bullish, down means bearish.
Yeah.
Green is up, red is down. Now, this is like very detailed things that you don't need to know, but it might be helpful. These are the characteristics of a candle. So right here is where the candle opened today. And we know this because as of right now, this is where the market currently is. This was the candle open. And this candle still has 45 minutes on this daily candle because the candles on this broker, it opens at 6 p.m. the night before until 5 p.m. the next day. So 6
Okay.
p.m. to 5 p.m. is when you'll see the daily candles, right? So at 6 p.m. last night, we opened right here. As of right now, which is 4 o'clock, let's just say the market is going to close with gold ending here. The reason why this candle is green is because in the past 24 hours, since it opened, this candle has gone up. So being that it's gone up within the time frame of the daily candle, that's why it's green. Because from open to close, it has pushed up higher than where it opened. Now, I want us to pay attention to this, though. You see this little circle here at the bottom, wick at the bottom? This tells us at some point when this candle opened, it came down a little bit. Now, when it was coming down, the candle was red at that point. Why? The candle was red at that point because it is lower than when the candle opened. So at some point, this candle was red, but then it ended up flipping and going higher than where it opened and ended up closing higher than when it opened. So if we look at this candle over here, this red one, when it opened here. When it closed right here. So because it closed lower than where it opened, that's why it's red. Is it important? Not really, not right now. But just so that you can have a little bit idea why the candle's green, why it's red, that's exactly why. So over here, what you see on TradingView is the current price of the instrument and how much time until the candle closes. This daily candle is going to close in 40 minutes. So again, we're in this daily candle, and right now this daily candle is bullish. It's green. So that means that when it opened yesterday at 6 p.m., since 6 p.m. yesterday, it went down a little bit, and then it ended up coming up higher than the price that it opened at. So that means yesterday at 6 p.m., gold was worth 4,830. Now gold is worth 4,920. So that means it's gone up. Okay. So this is the daily time frame. So every single day, this means this candle opened here at 6 p.m., closed here at 5 p.m. The next day, it opened at 6 p.m., closed here at 5. Then opened at 6, closed at 5, opened at 6, and we're still moving up. So now we're going to go to our 4-hour time frame. And the reason why we do this is because we want to see what is happening within that daily candle. So that means everything that's in that daily candle is this. On the 4-hour, every 4 hours, the candle closes. So that means in 40 minutes, this candle that it's currently on is going to close. So the reason, remember when I told you we seen that little wick coming down? This candle right here came all the way down here. That's what we see. So we seen it coming down a little bit, but remember, we're still on an uptrend. What do we see on an uptrend? We see up, down, higher up, higher low, higher high, higher low, higher high, higher low. So basically in this daily candle, this one bullish daily candle, this is all the activity that happened every 4 hours on this daily candle today. We go to the hour. Same thing here. Same thing here.
We see it here. So we're going high, but you see, even though we got a push down here, even though we got this, so because this was the last right here, that was the last higher low right here. So you seen us push up and then we came down. But guess what? Right here is still higher than right here. So we pushed and then we came up and pushed up even higher. What this tells us right here is everything that happened in the hour of this day. So every single hour, a candle closed. So now we go to our 30 minutes, same thing. We're just seeing that same bullish trend, but in more candles. So again, we're still respecting the higher high, higher low. We're still respecting the higher high, higher low. We're still respecting that. But all we're doing is just seeing it on a higher time frame. So on, so forth. So we have the 15 minutes here, same thing. 5 minutes here, same thing. This is what we see it just a little bit bigger. That's with the time frame. So what I'm going to do is I'm going to do some bar replay on gold in like the 1 hour time frame. We're going to just go back some. So based off of what you see right here, is this an uptrend or a downtrend? So this is a downtrend. And the easiest way we see it coming down. We see it coming down. But also we see a lower high, a lower low, a lower high right here, a lower low, right? And then this, for it to continue the trend, this is what we want to see. This is what we want to see. This is our downtrend. So remember, we're never going to necessarily see it just come straight like this, but we want to see that zigzag. That's what a trend is. It goes up and down, it goes up and down. Uptrend is higher highs and higher lows. Downtrend, lower highs and lower lows. So this right here is a downtrend. So we're still respecting this downtrend. We have our a lower high, a lower low, a lower high. Now we're just waiting for it to play out. And this could take 2 days, 3 days, 4 days. We don't know how long it'll take. But at this time, we have to go with what we see because we're day traders. We're not scalpers. We're not holding for a long period of time. We have to go with what we see. Now, something different has happened. We look here, we see that we were creating lower lows, lower highs. We see we were here, lower low, right? A lower high, sorry, a lower low, a lower high, because you see from here, this is a lower high. And then we had a lower low. Something happened here. Instead of us, because look, we have this higher low right here. This lower high right here. So what should we have gotten? We had a higher high. Yep. So you're exactly right. So a break of structure, I'm gonna write this down. So break of structure is when the trend breaks. So we see that right here because as you said, we should have been getting a lower low. And even if we didn't quite get the lower low yet, even if we quite didn't get the lower low yet, we shouldn't have ever gotten a higher high. We should have never, like this right here should have never happened because we should have been lower than there. Anywhere lower than here we should have been. So then if we continue to move forward, what are we seeing? Now we're seeing, not only did we, so this is what you call a trend reversal. Because we have a break of structure now, which is now we're disrespecting our downtrend. And now we're going high. We start to see a higher high. And now look at this, a higher low. So if we continue to play it out, we just keep going up and up. Higher highs, higher lows, higher highs, higher lows, higher high. We start to see that the trend has now reversed. So we're going down we have a breaker structure right here. And now we have a trend reversal. Now we're going up. So we're still on a what at this point? We're still at an uptrend. So you see how we were pushing. We made higher low. We made higher high. We made a higher high, higher low. So we have the higher high, higher low, higher high. And then we made higher low. We made higher high. But then we start to see something here. We start making equal lows here. And when we get to about right here, we're not doing anything. This is what we call consolidation. And this means when the trend is moving sideways. Consolidation, trend is moving sideways. If we look at this right here, can you make anything of a trend right here in this box? You can't tell if we're in an uptrend or a downtrend. We're consolidating. Now, some people can make a lot of money in consolidation. For the strategy that we use, we want to stay away from consolidation because this is confusion. Consolidation equals confusion, okay? Because you don't have a trend. Can't tell if uptrend or downtrend. Consolidation equals confusion. We stay away from consolidation. What should we see on an uptrend and on a downtrend? Exactly. And what do we do when we see consolidation? Consolidation equals confusion. Exactly. If we go to the 5 minutes, here we were moving up. See a little bit of a trend in the smaller time frame. New week, so when we get a breakout of that consolidation area, now this is what we call a break of structure again, right? Because we're moving out of so when you see the consolidation, it means we're in a range. Consolidation means we're in a range. So what we want to see us break out of that range because it let us know who's in control, buyers or sellers. So if we look at this candle right here, who's in control, buyers or sellers? And why are buyers in control based off this candle? So when we see it going up, we see it green, we see that it's finally able, because if we replay this, if we bar replay this, what does this tell us? And this is good to know. We see that we were coming up and we were doing higher highs and higher lows, higher highs, higher lows. But for some reason, this right here, this higher low meant that buyers stepped in. Sellers couldn't go. So what we call this bottom right here, we call this bottom support. The bottom is called support. So when we see that the sellers kicked in at this higher high, and then it came to this level, we found support right here. Support means the buyers did not allow price to go lower. Support, buyers did not allow price to go lower. Okay, so that's what we see here. But then we realized up here, instead of getting a higher high, really, we got kind of like an equal high. These are equal highs. So we're noticing that every time we get right here, the sellers are not allowing the buyers to go higher. They shoot it down. Same thing right here. So every time you see all these candles keep coming up here, but we can't quite make it past here. This is what we call resistance. Sellers did not allow buyers to go higher. So we start to see, this is why we call this a range, because we start to see, well, every time we get up here, what happens? The sellers kick in and push price down. Buyers try to come up again, but sellers push price down. But guess what? Every time that the sellers are pushing price back down, what are we seeing? The buyers are not really allowing sellers to come past here either. Something about this price, sellers can't get through, and something about this price, buyers. So this means confusion in the market. It's a power struggle, buyers and sellers versus each other. That's what consolidation tells us. Buyers and sellers are going against each other. So what we want to see is price breakout so that we can see who's in control. By knowing who's in control, that tells us where the trend is going. Now we get this happen. What does this tell us? This tells us that the sellers are no longer sitting right here. Because previously, every time we've come here, one time, two times, three times, four times, all these candles, every time we came here, buyers couldn't get past here, but all of a sudden, buyers can get through. Sellers are no longer sitting here anymore. Seller, based on this candle, sellers are no longer sitting here anymore. Finally broke out of this range. But what are we going to do next? So let's see how we started to react after this. So now we're starting to see, okay, we have this breaking out. Now we have this right here. And what do we now see? A higher high. What we want in order for this to know that we're continuing this trend is a higher low, higher high. So now what is this trend? Oops. What is this trend now? An uptrend. So you see the difference between a clear uptrend and confusion? That's what we want to see.
I want to make this one point once and make it stick. Trading against the trend is the lowest probability trade that you can take. That is not an opinion, that is math. When the market is in an uptrend, majority of price movement is going up. So if you're selling, you're fighting against the majority of the movement. You might win occasionally, but over 100 trades, fighting against the trend will lose you money. We always want to go with the highest probability, always. And the highest probability is always the direction of the trend. When all your time frames align, daily, 4 hour, 1 hour, all pointing to the same direction, that is your highest probability moment. That's when you pay attention. When they're conflicting, you wait. You do not force it. The market will always give you another opportunity. A blown account won't.
We always want to see us in a clear trend, and that's what this trend is showing us. So yesterday, this was the current. So this is currently what gold looks like. An uptrend, we're back at all-time highs, and all-time highs means we're higher than we were before. We see our higher high, higher low, higher high, higher low. We're all the way up here. 20 minutes till market closes. So we are pushing. We are pushing even in the 5-minute time frame. This is a clear uptrend. This is what we want to see. We can clearly see confusion here. Once we were able to break out of this confusion, it's clear to us that we're in that uptrend. Clear to us that we have these higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, and we're working our way up. This is the main thing. Knowing and being able to identify our trends is the most important thing. This is step one of our strategy, is identifying the trend. So this is here, you can clearly see we were on a downtrend right here. And then we ended up breaking after we came down here, right? Where the lower low, lower high, lower low, we started to break structure to the upside, now creating higher highs, higher lows. So we started to break structure to the upside. As we go along, we started to do what? We started to break structure to the downside again. So remember, because we're day traders, we're looking at and this is the biggest thing where people get messed up, looking at too much information. As day traders / scalpers that we are, We want to see current price movement. That's what's important to us. Current price movement is what's important to us. So we want to see what is the market doing right now, not what it did 20 years ago, 5 months ago. No, what is the market doing in this current moment? This is a perfect example. We were kind of inching our way, even though we were coming up, we did have some sort of pullback here. We started to break structure to the upside right here. So what we want to see is a little bit more confirmation. We broke structure here. Are we going to go to a higher low? Higher low, higher high. This is what we're seeing as the candles are printing. Now the candles are printing in real time. So again, that's why it's important for us to see, like, okay, what are we doing at the given time? Now, sometimes again, we want to see those break of structures happening. So if we see, for example, if we're seeing that we're on an uptrend, so we have a high, we have a low, we have a higher high, we have a higher high. So when we say we want to see a break of structure, what do we want to see? We want to see, to know that we're still respecting this trend. We want to see price go higher than the last high. Are still going with the trend. We want to see higher high. So we want to be higher than this previous high. Let's see what we ended up doing. Did we go high? Respecting. We got a break of structure because we really should have never gone lower than right here, because this could have been like, okay, we found an area of support right here. So when the sellers came in, right here, the buyers didn't let them go anywhere. So we shot up. But then also too, we see, so this is again where you see levels of support and resistance. So let me back this up real quick. So we were here. And again, we were waiting for that higher high, which we got a little wick out of it. So remember again, the wick tells us that this is as high as it went. So it opened right here, came all the way this high and dropped here. So this is like, so whenever we see any stop in a direction, yes, we can still be on a trend, but it's still a stop in a direction. So we want to pay attention to that. Why did the seller smack us out of here? So we want to pay attention to that. So we see again with this candle, this red candle right here, this candle tried to come up again here. The sellers are sitting right here. Sellers are camping out. They're sitting here. So the first time the buyers tried to come in, seller said, nah, out of here. Buyers tried again. Seller said, nah, out of here. So the sellers took over, but then the buyers didn't let us go lower than right here. So the sellers are sitting here, but guess what? The buyers are sitting here. We're seeing that we're in this little, remember what this is called? A range, consolidation. For some reason, we're stuck in here. Again, the sellers get close to right here, but the buyers are not letting them come down. We're still in this range. We're sending you, do you notice how these candles are smaller than these big candles we were getting before? That's the fight that's happening. Nobody is clear in who's taking over until right here. The buyers are no longer sitting here because the sellers were able to break through. So now we see sellers were able to break through. We have this high, we have this low, we have a lower high, we have a lower low. We start to see us going more and more and more down. So now we see again where we were climbing our way up, we hit a level. Remember, the top is the level of resistance, sellers level of resistance. buyer's level of support. We were in this little range, but then sellers took control. At this moment right here, sellers took control. Sellers took control right here when we broke through the buyers. We're coming down. And what happens? We find another level of, what did we find right here? Support or resistance. So we found a level of support right here because why? The buyers aren't letting the sellers go any lower. So where we should have been creating, we did create a lower high. We should have came lower than here and we didn't. So now we're working our way back up and we find ourselves back in this range, still with no clear direction until we're able to break here because we worked our way up back in this range, but the sellers made it through again. And now what do we have? We have a high, we have a low, lower high, lower low. And we're working our way down. And that's kind of been, like just kind of indecisiveness throughout the market. But we can clearly see a downtrend. This is our downtrend. We're clearly seeing it until again, you see that break of structure clear as day here because we had the lower high, lower low, lower high, lower low. We hit a level of support here, and then automatically we see break of structure.
Right.
And then we see a higher low and a higher high. That is the main thing, and that's the first thing that's the most important.
That's session 2. You now know how to identify a trend and how to read the market top down. So homework as always. Your homework this week, open TradingView every single day. Start on the daily, work down to the 5 minutes, and don't look for trades. Just identify the trend on each time frame and write down your bias. Remember, bias is whether we're going for buys or sells for the day. Do that every single day this week. By Sunday, you'll see the market completely different. I promise you that. Your journal template is in the description below. Start logging what you're seeing, even if you're not trading yet. I'll see you Sunday for our session 3, break of structure. That's where the strategy comes alive. So we're gonna close in prayer. God, we just thank you for this amazing session. We ask that you help everyone to retain this information. Give us the discipline to actually do our homework this week, so next week we can come back better than we were today. We thank you for all the amazing things that you do for us. Thank you for the wealth and prosperity that's coming to us so that we can turn around and bless your people and bless the kingdom of God. Everything that we do in excellence and unto you. In Jesus' name, amen. See you guys next Sunday.